My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Let's be my friends. I'm just trying to save a little money. My job is not just to entertain, but to explain what the heck is happening. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. The data center is dead. Long live the data center. Enterprise software is dead. Long live enterprise software. Momentum is dead. Long live momentum. Yep, today's decline is about those three obituaries, all of which I'm going to tell you I think are premature. But that is why the Dow dipped 154 points, S&P declined 0.30%, and the Nasdaq lost 0.25%, with some real deterioration under the hood of that index. Let's go to the setup. Lately, the data center stocks and the enterprise software stocks have been the leaders of this market. It's been that way ever since the election, when the engineering and construction stocks' former leadership gave up their role right after the post-election spike. Now, you know I think leadership is incredibly important when it comes to the stock market. We've seen a level of excitement about the data center and how they are knowledge factories. They manufacture everything we need for generative AI and Agentics, the world of non-existent beings who can do customer service jobs better than we can. At the same time, we've fallen back in love with software companies that help engineers create programs that do everything under the sun, just like the data center. Enterprise software is invisible to you and me and to most traders. But both the data center and enterprise software have momentum, and that's highly visible. They offer scale and speed. They offer wonder and excitement. Think Palantir, think AppLovin, think Supermicro. And then behind the data center itself, of course, what do we find? NVIDIA. We don't know what exactly triggered this now two-day pullback, and we don't want to play pin the tail on the sell-off like everybody else who has the temerity to think they do. Yesterday, while I was working on a lead about how 18 companies had reached the $100 billion mark in 2024, some big fund was actually laying risk off in this very same cohort. We know from an outfit called Bespoke Investment Group that all 26 of the Russell 1000 stocks that were up 100% on the year through last Friday, we know they fell yesterday with an average loss of 5%. You get a chink in the momentum armor. It does tend to combine two fairy tales, the little Dutch boy with the finger in the dike and Humpty Dumpty falling from that wall with a bunch of clueless Kingsmen, not even a bottle of Elmer's glue to be found. But let's go back to the epicenter, data centers and enterprise software. Right now, we know that the world of artificial intelligence includes generative AI, accelerated computing, and now Agentics. When people start investing billions of dollars in something called Agentics, I might have to just throw the red flag. Simply because you won't find that word in the Oxford English Dictionary, even though I use it a lot. Now, it doesn't get any better if you use ChatGPT to get a definition. The genius that is ChatGPT tells us, and here I'm going to quote, the term Agentics is not widely recognized or formally defined in mainstream English dictionaries or academic fields, but it appears to be a neologism that combines the elements of the words agent and dynamics, or potentially other suffixes like genetics or analytics, depending on the context. Whew. Now I understand. Now, if an agentic force like ChatGPT doesn't know what Agentics is, how the heck are we supposed to figure it out? We do know this, though. It's NVIDIA that's been talking about Agentics, as well as Salesforce.com. And NVIDIA stock is truly under attack from the sellers. It's been besieged for days now, down over $10 after a 4-day losing streak, with the damage getting worse when the People's Republic of China announced it's investigating NVIDIA for monopolistic behavior. I thought that might come to an end last night when Taiwan Semi, the manufacturer of NVIDIA chips, reported November revenue up an astounding 34%. And by the way, it looked for a moment like it would. But then the king of semiconductor engineering started a hideous rollover, one that spared no prisoners for anything related to the semis. Taiwan Semi closed down $7.23, or 3.6%. Brutal. NVIDIA fell $3.74, down 2.69%. What crushed the group, really? All right, there's a lot of shadow boxing here, but the proximate cause was the plummet in Oracle, which wants to be the biggest builder of data centers worldwide. Frankly, I thought the numbers were good, and don't let anyone tell you otherwise. CEO Safra Catz stunned us right from the front, right from the get-go, saying that she expected cloud revenue, a spec not that long ago, should reach $25 billion this fiscal year. That's staggering, people. The rest of the call was all about the insatiable demand for more data centers and how Oracle can't build them fast enough. Larry Ellison, the revered chairman of the board and chief technical officer, told a story about how Oracle can build data centers faster and cheaper than anyone else on the planet, and they don't burn as hot. I was blown away when Ellison said, I quote, "We just extended our AI performance advantage by delivering the largest and fastest AI supercomputer in the world, scaling up to 65,000 NVIDIA H200 GPUs," end quote. Think of it. We've got NVIDIA. We have supercomputers. We have demand, and then demand. And we have an amazing company, Oracle, that simply can't meet the demand. There's a reason 4 out of 6 analysts on the conference call offered effusive congratulations. That's the greatest endorsement they can give. But it was all for naught. Oracle stock got clocked from the moment the numbers printed, and it kept going lower and lower and lower because not every line was a blowout. More on that later. But most were, some not. And given that the stock was up 80% for the year before last night's report, we needed to see absolute perfection, and we didn't get it. Oracle's swan dive splashed red ink all over the fellow travelers. That's Dell, that's HP Enterprise, that's Supermicro. Ugly. More on Oracle's plum. Coming up after the break. All right, that's the AI side of the downfall. How about the enterprise software side? That was more harsh. It was based on the collapse of a stock of a company you may never heard of called MongoDB. Oh, it's a tremendous company that, just like 10 other tremendous companies, allows you to store, collaborate, improve, and dominate at scale everything and anything. Mongo reported last night. It was fantastic, terrific. Congratulations, quarter, $1 billion, a blowout, just been incredible. Right after the numbers printed, the stock jumped first 20, then 30, then 40 points. I started kicking myself that we didn't own it for the charitable trust. I was already thinking about how to explain the oversight. And then I read that some guy I'd never heard of, who was the COO and CFO, was resigning after 10 years. Michael Gordon. Yeah, Michael Gordon. I've been sticking around for 3 weeks, and then he's out of there. I thought MongoDB had a ton of good people led by the dev Idicharia, that it was like a major team outfit, you know what I mean? Like kind of like an NFL team or something. But it turns out, no. It was Michael Gordon. He was the man. At least that's what the stock's saying, as MongoDB plunged an astounding 100 points from its high after reported last night to where it got to. Michael Gordon. Michael Clayton? I don't know, I like that movie. Anyway, so there goes the enterprise software neighborhood. AppLovin down 6%, Workday off 3.2%, Atlassian Simple Team down 2.4%, Datadog, MongoDB, of course, Datadog down 3.9%, Bill Holdings, Monday.com, Twilio, I mean, they all got slammed. Only the king, ServiceNow, was spared and rallied big, as it always seems to do. It's a software Tesla, which, of course, was also up again today because it's Tuesday. Now, I know it looked on the surface like things were fine in mega cap land, Alphabet, and they got the quantum chip, and Apple, true stalwarts. The industrials look very strong. Well, okay, sure, Toll Brothers flying the alignment, big home builder down 7%, cloudy forecast. But today was about reversing the enterprise software data center semiconductor rally. And in its stead, we got the money flowing back to its rightful industrial place, led by Boeing, which, guess what? It's back in the business of making planes again. Who would have thunk it? The bottom line, honestly, I don't mind a day like today. The stocks that got hammered had all gone parabolic. You were supposed to ring the register. I said that about 20 times in the last 3 weeks, to the point where I don't even like myself. Those started rolling back. Oh, not that I like myself anyway, or else I wouldn't be doing the show. Anyway, today was day 2 of the sell-off, and you know what? Most likely more to come. Hey, why don't we start the questions? I think we start with Andrew in New York. Andrew.
Booyah, Jim. Thank you so much for taking
my pleasure.
What a birthday gift I get to have.
Happy birthday. What are you? You said, excellent. What's the stock?
I'm a 17-year-old high school student. Huge fan of Mad Money, especially your investment club. Definitely recommend joining. It's been a game changer. Thank you so much for that.
Oh, man, thank you.
Thank you. I wanted to pick your brain about Eli Lilly, ticker LLY, between the company's Mounjaro medicine and its massive potential in obesity and diabetes markets, which brings in billions and gross margins around 80%. So I've started to try to build a portfolio on the future of healthcare. My grandpa bought Lilly in 1979. He's always reinvested dividends. He hasn't sold any. He told me to buy it, and I bought a bunch of shares a couple of years ago. I absolutely love it, but I got to know from the stock king.
Okay, here's the deal. Right now, Lilly has lost its momentum. It just announced a $15 billion buyback, and it's boosting dividend. Nobody seems to care. All the drug stocks have been down. A lot of people worried about the new president coming in. A lot of people worried about Bobby Jr. I look at it like this. I say that sometimes you have to take a little pain, make it some big gain. We had to do it in the first go-round with the charitable trust. We had to do the second go-round, and we're now endorsing a third go-round of pain. And I've got to tell you, if I could take a match and just light it to my hand, I might just say, oh, Eli Lilly. But you know what? soon the match goes out. Roy in California. Roy.
Hey, Jim, how's it going?
Couldn't be better. How about you, Roy?
Can't complain. Well, I got a little concern, though. I'm looking at Uber, and with the expansion of Waymo, and I've heard about a deal between Waymo and Uber, I'm trying to figure out how to play it. It dropped considerably the other day when Waymo...
Right. Well, I'll tell you. Okay, let me tell you what's going on with Uber. It's as stupid as all get out. The chart's bad. We're now in a chartist market. Is there anything really wrong with Uber? No. Is there anything really Airbnb? No. I mean, like bookings.com, they're all the same. And when the chart's good, people buy them. And right now, we're gripped in chart land. When the chart's bad, people sell them. It shouldn't be that stupid, but it is. We are gripped by a wave of stupidity, the likes of which I haven't seen perhaps maybe since Jefferson said the First Amendment allows stupidity. Incredible. It was in the Federalist Papers. I read it. I was a history. I was going to be a history professor. I'm telling these guys. Anyway, look, I don't mind a day like today. All the stocks that sold off had gone parabolic. And what did I tell you about parabolic moves? Hey, you know what? It's all fun and games till somebody gets hurt. Mad Money tonight. What's ahead for the regional banking space? There are no parabola. I like this. Don't miss my exclusive Ohio-based Key Corp. Plus, it's a tale of two tech stocks. I'm seeing what's behind the opposite post-earnings moves between C3AI and the aforementioned Oracle. And it's time maybe to make a little change. Plus, convenience change giant Casey's, oh, you've never heard of it. I don't care. It's shot up more than 50% this year. And I'm breaking down to see if it's got more room to run, or is it just going to be like Wawa, which is not public. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.